Hello. So I made a video on cryptocurrency, specifically about the tax that we pay on cryptocurrency, and the video has done pretty well. So as a result, a load of people who know a hell of a lot more than I do about cryptocurrency have left comments suggesting ways that they think that you can avoid that capital gains tax. So in today's video, let's put their theories to the test.
What Panama has shown more than anything is that there's one rule for the rich and one rule for the rest.
It seems like if you're a big business, not paying tax is easy.
Corporations are literally going wild over this.
They have tax havens in far-flung destinations, parking pounds in Panama for seven-figure savings.
Of one of the biggest ever leaks of offshore secrets.
Wild over this.
Life insurance borrowing is just another thing corporations use to keep HMRC wondering.
Wild over this.
And shell companies provide healthy subsidies to support their fat cat corporate gluttony. But what about us? It can often feel like there's two sets of rules when it comes to tax. There's us normal folk that pay tax on absolutely everything, when we earn it, spend it, invest it, or even if we give it away. And then there's these huge corporations that seem to get away with paying next to nothing on billions of pounds worth of profit. So can we all act like shady corporations or sleazy billionaires and dodge ourselves a little bit of tax?
Well, Ali is asking for it. Don't be trying to get...
I want to clarify, I'm not against paying tax, unlike a lot of the people in my comment section. Tax is theft. Look, no one likes paying tax, and trust me, I pay my fair share. But at the end of the day, I like living in a country where any child can get a free education, and that I know that if I get poorly, there's going to be a high quality medical care there for me. Yeah, people take the mick out the benefit system, and that annoys me. But it's like getting annoyed when you go to a free bar at a work do or a wedding because there's always that one chopper at the bar ordering a treble vodka Red Bull and rinsing through the tab. I hate that guy, but it doesn't mean I want the free bar to stop. But if someone tells me that there is a compliant and legal way to avoid or reduce my overall tax bill, I am all for it, and I'm definitely going to explore it and try and share it with you guys. But that being said, there's a big difference between tax efficiency and tax avoidance. So the thing that we're going to do today is explore all of these options and decide, one, if they're legal, and two, if they are an actual legitimate way of reducing capital gains tax on crypto investments. First of all, let's just put a real simple one to bed. A lot of people said, well, if Coinbase is sharing information with HMRC, I just won't use Coinbase then. Just to be clear, it isn't just Coinbase that is sharing this information. CX.io and eToro have both admitted to being contacted by HMRC, and I highly doubt they just blue tick no replied Rishi and the boys. And if you check the T's and C's of most of the major exchanges, there are clauses that read along the lines of, we will cooperate with HMRC or tax officials if required. Look, I'm sat here on record talking about tax, so I have to be really careful about what I say. If you move money from an exchange to another for the sole reason of not paying tax, that is tax avoidance or tax evasion. And if you're caught by HMRC, they will look very dimly on that point. Now, will they catch you? I don't know. But all I'm saying is, if they were to catch you, they wouldn't be happy about it. So instead of moving your crypto, how about we move ourselves? The amount of people that said to me just move to Malta, Portugal or Germany was pretty hilarious. First of all, I just want to ask a question. If you've got enough crypto in your possession that you think it's worth it to completely uproot yourself to move to a different country so you can avoid at what stands at currently a maximum 20% tax, how much crypto you got, son? I'm sat here with a few grand in crypto. It isn't really practical for me to flee to Mexico, is it? It would literally cost me more than that to move. And honestly, I don't think Cobweb would be too happy about the flight. You might like the beach though. Right, all jokes aside, what we're talking about here is becoming a tax exile. Basically, living outside the UK long enough each year that you no longer owe tax here anymore. In order to qualify for tax exile status in the UK, you need to tick the following boxes. You need to spend fewer than 16 days in the UK, or 46 days if you've not been classed as a UK resident for the previous 3 years. Or you work abroad full time, averaging at least 35 hours a week, and spend fewer than 91 days in the UK, of which no more than 30 were spent working here. And here's the real kicker. According to the website Tax Cafe, if you purchased an asset in the UK, then you move abroad, you need to wait for 5 whole years before you can come back to the UK as a non-tax exile. Sorry Cobweb, looks like the Mexican dream is over. There's always Blackpool, I guess. Al mal tiempo, buena cara. 20 quid to the first person who tells me what that means in the comments. Before you beat me up in the comments saying, let's see if they can find me. This ain't catch me if you can. No one's chasing me around the world. I'm not saying they will. I'm just regurgitating information that I found on other websites that specialise in these tax matters. But to me, and 95% of the people watching this video, relocating to another country to avoid capital gains tax isn't worth it because we would lose more money than we gain just in the relocation costs alone. Which brings me on to my next point, offsetting your losses. Basically, if I've lost money on investments, can I offset this against the gains? When you report a loss, the amount is deducted from the gains you made in the same tax year. If your total taxable gain is still above the tax-free allowance, you can deduct unused losses from previous tax years. If they reduce your gain to the tax-free allowance of £12,300, you can carry forward the remaining losses to a future tax year. So this one is legit. You can offset losses from this tax year or previous tax years against your capital gains to reduce the overall bill. You made 50k this year and you want to lock in those gains, but last year you lost 20k. You get £12,300 in tax-free allowance and that loss of 20k, so you will only pay tax on the £17,700 that's left. You can claim losses up to 4 tax years after they happened, so if you lost loads of money in the 2017 crypto bubble, you can now offset those losses against the gains you're making at the minute. But it's hardly a straight win, is it? I mean, what kind of flex is it to be like, I don't pay any capital gains because I lost so much money a few years ago that it just offsets all the gains I've made now?
Now, he was up quite a bit as well, but now down 10 million.
Another legit one is transferring assets to your spouse. So if you're married, you know, husband, wife, whoever you're married to.
I'm definitely physically attracted to this fence, and I would like to get to know this fence better.
You can transfer a portion of your gains to them and then they can use their tax-free allowance. So basically as a couple, you get in the region of what? £24,600 worth of capital gains allowance each year between the two of you. So if you're sitting on fat gains, you can use both of your allowance. Another legitimate one for all you people who have tied the knot. Probably the only time that marriage isn't going to cost you money. Going to get a few dislikes for that one. The next one on our hit list of moody ideas is selling the crypto, then buying it straight back again. Capital gains is applied to any gains. You're allowed to lock in up to £12,300 a year in gains across all of your assets before you start paying any capital gains tax. The capital gains tax is based on the original price that you bought the asset at. So some of you smart so-and-so said, what's stopping me from buying Bitcoin, it rising £12,000 and then me selling the Bitcoin at that point? I can then rebuy it instantly, locking in that gain and then buying at a new higher price. So capital gains tax applies from the new price. Seems sensible, right? This is weirdly called bed and breakfasting, and it's not a new idea. People did this in the stock market until 1998, when they introduced a rule that stated you have to wait 30 days before rebuying the asset again before it counts as a new purchase. So that really isn't an option because the idea of selling it, waiting 30 days and then rebuying back in, I mean, we all know what can happen to crypto in 30 days.
Oh. Jeez, Brian, I don't know what to say.
Right, the last two, and I promise the last one we're going to look at is really interesting. But before we do that, a lot of you rightly questioned, well, if cryptocurrencies are currencies, then why can't I just spend it? Like normal cash, then I don't dispose of it, capital gains tax doesn't apply, Rishi don't get shit. Unfortunately, for some reason, HMRC don't class cryptocurrencies as currencies. They treat them as assets. And by their definition, anytime you dispose of an asset, you potentially owe capital gains tax. Which is a bit of a kick in the nads if you were planning on buying a brand new shiny Tesla with all your Bitcoin because Elon's just announced they might accept it in the future. What has a crypto fanatic got to do to dodge himself a little bit of tax? For me, not much has changed. I'll make sure I stay under the capital gains allowance each year to avoid getting taxed. Pray I don't incur any losses, but if I do, make note of them so I can use them to offset future taxes.